How to trade the market open. If you clicked on this video, you're clearly interested in that. I'm going to explain to you how I did this trade, and in literally 10 minutes flat, I made $10,439 from this exact trade. I'll go through how I did it, etc., how you can copy it and trade the market open like an absolute professional. So let's get into it. So before we get into it, something very important. The market open is the best time to trade. Don't listen to these people who say stuff like, hey, the best time to trade is a couple of hours in, because in the bro, forget about it. Market open is the best time to trade, and it's for a very simple reason, and that's because there's more people trading. And I've backtested this for months, like months back. I've backtested this, not for a day or 2 days or a week. I've backtested this for months, and what you find time and time again consistently is that trading at the market open is the best time to trade. And again, you might ask yourself why. It's because more people are watching. Everybody's watching the market open. Everybody, right? As time goes on, less people stay on, less people care, less people whatever. But everybody's watching the market open, which means there's going to be more volume, right? What does more volume mean? More volatility. What does more volatility mean? More money for you. So this is super important to just consider. I don't ever trade like fucking an hour in or 30 minutes in. I trade pretty much every single day the market open. That's how I've traded for months and months and months. That's what worked exceptionally for me. I seriously do not recommend you listen to these people who say, oh, the best time to trade is 1 or 2 hours in because then the market is settled and there's sentiment. Forget about it. You're going to miss the whole move. You're going to get in at the exact top and you're going to lose all your money. Think about it. If a stock is going to go up in market open and just sideways for the rest of the day, you're going to get in when it's sideways. You're not going to get in when it's going up. You're going to get in when it's sideways. This is not what you want to see. You want to be seeing moves. You want to catch the move. You want to ride the wave up. That's what you want to do. You want to ride the wave up. You don't want to just go sideways for 3-4 hours. You don't want to do that. Very important. Quick heads up. I have my free trading bundle. It includes a free course, ebooks, trade. It includes so much. Click the first link in the description. Go check it out. It's completely free. It's very, very, very beneficial. So the next question you might ask is, okay, I will trade the market open. I'm convinced. But which stock do I trade? There's thousands and thousands and thousands of stocks. Which one do I trade? And it's a very simple answer. And again, for some of you guys who have been watching me for a long time, you guys know what I'm about to say. You need to trade gappers. Now let me quickly explain what gappers are for the people who don't know. Gappers are just those stocks which go up in pre-market trading. So essentially, they open at a price which is higher than yesterday's close. Now this can be due to multiple different reasons, right? If you look at the stock over here, the one on the right, you can see that around about this time, a couple of hours before market opened, it just went up. Why did this happen? Most likely there was news of some sort, right? They had some medicine that got approved, or they had this deal that went through and now they're making a crap ton of money, or the CEO said this, whatever. Whatever happens, the stock immediately goes up, right? And people also ask me, they say, okay, why don't you just trade this? Like, why don't you buy over here and sell over here? Bro, I've tried that, and let me just save you months of your time. That is extremely difficult for many different reasons, because you're competing against literal robots. Let me tell you what happens. This is a secret that nobody tells you. This is like exclusive stuff. When these stocks, they release the news, there are literally robots that their function is to take the news, analyze it, buy or sell the stock instantly. So let's say the news is released at, let's say 9 a.m., right? 30 minutes before market opens, the news is released. Boom. News is released. Within a nanosecond, these robots analyze the news. Okay, it said that they've done a deal. They're planning to make $20,000 more profit, etc. The stock is a buy. And they instantly go and they start buying up the stock. And when they buy up the stock goes up and up and up. And then you start seeing it kind of over here at this level. And you're like, okay, I think maybe I should buy it. You buy it and it dumps down. And now you have to sell for a loss. Don't be messing with these type of things, bro, because you're trading against literal robots and you're gonna lose every single time. Because they're robots, that's what they're designed to do. So don't be doing that. So let's get back to it. That's what a gap is. A gap is essentially when a stock goes up pre-market for many different reasons, news catalyst, blah, 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 blah. Only focus on these stocks. Why? Well, we just mentioned on the previous slide, we said you need to be focusing on the stocks that have a lot of volume, that a lot of people are watching. What stocks are people watching? The ones that are gapping up. Because those are the ones with volatility already. Going into the market open, there's a crap ton of volatility in pre-market. So these are the stocks that every single person is watching. Therefore, there's going to be more volume, as we discussed, more volatility, you make more money. So you look at these gappers. You can find them on stock screeners. There's so many different places you can find them. But once you've identified the gappers, the next thing you want to do is you want to identify, okay, let's say there's 5 gappers, there's 10 gappers. Which one of these gappers do I want to trade? So for example, I have 4 gappers in front of you right now. Which one would you trade? Like, pause the video for a second and guess, okay, this is pre-market trading. When market opened, which one of these went up? Just pause for a moment, look at it. I'll give you some time and guess. Now for the people that guessed this one, you are wrong. This one, wrong. This one, definitely wrong. This one, you're right. Now let's analyze a few things really quick. What does this stock have that these don't? Right? Or what does this stock not have that these do? And what you quickly find out is this. This one has a shit ton of volume. Look at the volume over here. It's fantastic. Look how much volume there is. Look at the volume over here. This is so shitty. Can you believe there's people trading these type of stocks? I don't know. Who is trading these people? Who are the clowns that are trading these stocks? It's so weird to see. If I see this, I'm running away. I'm never going to be looking at this being like, well, that'll go up. Never. I'm running away. Don't trade stocks like this that are so thinly traded with no volume. You never want to do that. What about this? What do these have in common that these don't? Well, you can see over here there's dark blue. What does the dark blue indicate? That just indicates that there was news posted post-market. This orange area is pre-market, this is post-market. So the day prior, that's when the news came out. Now these stocks usually don't do super well on market opens because the momentum is just lost, right? Imagine this stock. Like, let's say 30 minutes before market opens, there's news. The news is how, okay, this company is going to make $10 billion. There is so much momentum. Everybody's hyped about it. When news comes out the day before, like, that's yesterday's news. Nobody really cares. Nobody's hyped about it. It's like, who cares? So in general, you want to avoid these post-market gappers because they don't work that well. Again, some days they work amazingly, but that's anomaly. You want to just be consistent with this. This is the type of stuff you want to see. Study this, all right? Now again, if you're in the Draco room, I post my watch list daily. Every single time I see a stock that has potential, I notify the people inside the Draco room, inside my community. I tell them. So on this day, I literally mentioned staff. Right over here, you can see I mentioned staff. And this is the stock staff that I traded where I made 10 grand. And you can see Luke over here, mostly from staff, he made $604. This is how easy it is. Like, identifying these types of stocks, trading them market open. Like that's how simple it is, boys. Now, pullbacks. Pullbacks are extremely important. One of the main reasons that I think a lot of people fail the market open is because they think that they need to get in as soon as market opens. That's not the wisest thing to do because now you're just gambling. What I like to do is this, right? I like to watch what happens in market open. And what you realize is usually when market opens, immediately the stock starts to go down. Why does it go down? A couple of different reasons. The first reason is bag holders taking profit. There are some people that have been holding the stock for months, weeks, years, and they're down 90-80% on their positions. So as soon as this stock gaps up 20%, they're like, holy shit, this is my only time to get out because the stock's a little higher. Let me sell. And so all of these people hoard it and they start selling and selling and selling. That's one of the reasons. Second reason is that shorts are coming in quick. Like pronto. Like these people are going to be like, holy shit, this stock's going up. I think it'll go down. I think the gap's going to fill. Let me short. All these people start shorting and the price goes down, 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 down. But what's important is you need to watch for support. So essentially watch the stock that you've selected and see how it reacts to certain price levels. Sometimes it's the 200-day moving average. It uses that as support. Sometimes it's a dollar average, right? So let's say the stock's, it opens at $2.20, but you notice that at $2, it just holds for support. And every time it hits $2, it just gets bought up quick. Hits $2, gets bought up quick. Hits $2, like same thing. You can kind of understand, okay, so there's momentum. People are interested. At $2, there's a huge number of people who are interested in the stock. That's extremely bullish. Don't get in the second market opens. Wait for a tiny pullback, like a tiny little pullback. And then you're like, okay, you know what? It's time to get in. But don't be like doing like, okay, all this stuff about, no, I need to get in as soon as market opens. Don't be doing that. Plus, here's another thing. I'm talking from experience. If you get in the second market opens, the price that you're going to get filled at is going to be horrible. It's going to be ass because there's just so much volume. So you always want to get filled in at a good price. Wait for a pullback. That's the main thing. Just wait for a fucking pullback. What's the result? 50% in 2 minutes, $10,000 in 2 minutes, and I can enjoy the rest of my day. That's how this is why I love this strategy so much. I've like, tried so many strategies and paid for like different things, and this is the best, absolute best thing I've found. And you can see within 2 minutes, the price is literally just 50%. I can take my money out. I can enjoy the rest of my day. I'm done. I'm finished. And because I made 10 grand, I don't have to trade for the rest of the week if I don't want to. So it's really, really, really effective. And you can see what I did over here. Stock opened over here. It went down. It hit this level, and I noticed every time it hit that level, because this was a previous support, it got bought back up. Hit it again, bought back up. The next time I hit it, I instantly pressed buy. 50%. That's how simple it is. Don't overcomplicate it. Don't be weird about it. Don't think you need this indicator with that overflow with the bank. Just keep it extremely simple and use logic. That's it. So what's a step-by-step plan? Step-by-step plan is this. Screen for gappers. Identify 1, 2, 3, 4, 5. I'm going to be honest, some days are absolutely absurd and you end up watch listing like 10 stocks, which is fine. Those days do happen, but they're kind of rare. But if you can identify 1, maybe 2, 3, 4 stocks that you're going to focus on, wait for a pullback and support. And once there's confirmation, enter. Sell at 50%, you can sell at 100%. It's up to you. And you can enjoy the rest of your day. That's another reason why I like this so much. I can wake up, trade, boom, finish. I can enjoy the rest of my day. I'm not thinking, oh fuck, this, that, and the other, I lost this. I can enjoy the rest of my day. That's how simple it is. Now don't forget, if you want to watch a video on how to make $500 a day from day trading with a high win rate, click the video that just popped up. It's a pretty good video. Just a quick reminder, get the free trading bundle, first link in the description. And if you want to join the Draco room, where I go more in depth about personal trading, I share my watch list, etc., blah, 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 second link in the description. Thank you guys for watching. I love making these videos. It's so fucking enjoyable. Subscribe, like, all that good stuff. See you guys in the next video. Goodbye.